Welcome back to Investing Talk podcast. Today, we're focusing on a company that's generating some significant buzz in the critical mineral space, USA Rare Earth. And the big question we're tackling, based on the sources we've looked at, is pretty simple. Is USA Rare Earth a good time to buy right now? Before we really get into it, just a quick reminder, please subscribe, like the show, and definitely comment below. We love hearing from you.
Also, if there's a specific company you want us to examine next time, let us know in the comments.
Yeah, absolutely. And our mission today is pretty clear. We've got quite a mix of information here, financials, technical charts, some key operational updates, and, well, a good deal of market rumor, too. Our job is to sort of sift through all that, pull out the hard facts, look at what might drive capital flows soon, and really help you understand the full picture for this company, because it is a development stage company, which is important. Okay, let's start with this story then, the narrative. USA Rare Earth isn't just, another mining stock. It's really being framed as a strategic player, isn't it? Like a key domestic supplier for minerals that are absolutely vital for, well, almost everything tech-related these days.
That's exactly the core thesis. We're talking about those really high-demand rare earths, neodymium, dysprosium, terbium critical stuff, plus other strategic materials like gallium and lithium. I mean, these go into high-performance EV motors, defense systems, semiconductors, you name it.
And what gives them that strategic edge? The sources mention a moat. What does it actually mean here?
Well, it really boils down to aiming for U.S. supply chain independence. They're one of only a handful of U.S. companies that actually have assets getting close to production scale. Their main project, the Round Top Mountain site down in Texas, keeps coming up in the sources as a potential, well, game changer. Historically, the U.S. has been almost completely dependent on China for processing these minerals. Round Top is designed to kind of bypass that, and that creates this huge incentive, almost like a national security premium baked into its valuation. It's not just about standard mining economics.
Right, and that strategic angle definitely seems to have fueled the recent price action.
Right.
I mean, the Nasdaq debut alone was a major event. The stock went on a pretty wild run, didn't it? From a 52-week low around $5.56 all the way up to nearly $44.
Yeah, a huge surge. And even now, the interest seems pretty strong. As of October 22nd, 2025, it's trading firmly in that $26.80 to $32.25 range. That shows continued accumulation, right? Sustained investor interest. And the liquidity is there, too. Daily volumes often over 34 million shares. That tells you institutions and retail traders are both heavily involved.
Okay, so that's the narrative, the story driving the price. Let's pivot now and look at the cold, hard numbers, because this is where, the potential bumps up against the current reality.
Yeah.
What do the financials actually tell us if you were to buy in today?
And this brings up, I think, the single most crucial point for anyone looking at this stock. You have to treat USA Rare Earth as a development stage company. It's pre-revenue. They're investing heavily, burning capital to build out their production capabilities. They aren't profitable right now.
So give us the headline number that really hammers that home.
Well, the most striking one is the trailing 12-month net loss, the TTM loss. It's $107.51 million. TTM just means looking back over the last 4 reported quarters. And yeah, a loss over $100 million. So that signals massive ongoing spending, project development, engineering, getting facilities ready. So naturally, things like revenue, profit margins, they're listed as not applicable or just not disclosed yet because large-scale extraction hasn't begun.
Wow, okay, $100 million loss. That's significant. Yet, despite being pre-revenue and having that loss, the market cap is around $2.6 billion. That puts them right up there with the bigger players in the U.S. rare earth space. How does the market justify paying, $2.6 billion for a company losing that much money?
That's the paradox, isn't it? And it's key to understanding the valuation. The market isn't valuing it based on current earnings or discounted cash flow like you would a mature company. It's pricing in the future value, the value of resource security, of de-risking geopolitically. Essentially, investors are placing a massive bet on the successful execution of that Round Top project. They're anticipating billions in future revenue once production ramps up, driven by that long-term demand for EVs, defense, tech. So you're buying the strategic potential, the asset itself, not really the current income statement.
Okay, but then you look at the professional analysts, and there seems to be a bit of a disconnect, right? The consensus is generally strong buy or moderate buy, but their price targets are mostly between, $17.67 and $26. If the analysts who follow this day in, day out see a ceiling around $26, why is the market paying up to $32.25 right now? Is it just momentum, or are they pricing in something specific?
I think they absolutely are pricing in more than the analysts, or at least ahead of them. The fact it's trading above that higher analyst target, Well, it confirms that momentum and speculation about future catalysts are really in the driver's seat. Traditional analyst models might struggle a bit to quantify that strategic national importance factor, or maybe they're just waiting for the next earnings call to update their models, adjust the probabilities for project success. The market, though, seems much more aggressive. It's chasing the narrative, chasing the potential upside right now.
So definitely high risk, high reward. And it sounds like it's all driven by execution and what happens next. Which brings us nicely to the timeline. Let's look ahead, because this company seems packed with potential catalysts, events that could really move the needle.
Right, and the stage was kind of set over the last few months. That Nasdaq debut back in August really sparked talk about ETF inclusion, which is, important for bringing in institutional money. Then in September, management was out there doing outreach, clarifying their strategy, boosting visibility. October has really been about building anticipation for the upcoming earnings.
Okay, so let's drill down then. The next 3 months, say, through the end of this year and into early 2026. This seems like a critical period where institutional moves could really shape things, maybe even more than the mining progress itself.
Definitely. There are several key dates circled on the calendar. First up, the Q3 2025 earnings are huge. The announcement for the report and the conference call is scheduled for October 28th, and the sources mention the actual report date as November 6th. Analysts will be all over that, not just the numbers, but listening for any updates, granular details on project milestones, how they plan to spend their capital. Any hint of a major delay there could really hurt the stock.
And beyond the company's own news, what about those broader market flows, the things that move stocks sometimes regardless of fundamentals?
That's where November and December come in. On November 15th, there's a scheduled ETF index rebalancing. Now, because they just listed on Nasdaq, if USA Rare Earth gets added to key indices, say materials ETFs or maybe even some tech-related ones, that forces large passive funds to buy shares. That means more liquidity, more visibility. Then, December 5th is the deadline for institutional holdings disclosures, the 13F filings.
Right, 13Fs. For anyone listening who's unfamiliar, can you just quickly explain what those are and why they matter here?
Sure. A 13F filing basically shows which large investment funds, we're talking managers handling over $100 million, are holding the stock at the end of a quarter. It's a really big signal of confidence. If you suddenly see well-respected hedge funds or big asset managers initiating large positions in USA Rare Earth, well, that acts as validation for the whole bullish story. It can trigger more buying into the new year as other funds kind of follow the leaders.
Okay, so confirmed dates are important, but the sources also mention quite a bit of rumor and speculation, things that aren't confirmed but could be huge upside drivers, maybe justifying that price above $30. What's the main gossip?
Yeah, the chatter seems to center on locking down actual contracts. One big rumor is about advanced talks for strategic partnerships, specifically rare earth magnet supply contracts with major OEMs. OEMs meaning original equipment manufacturers, think big auto companies or defense contractors. If they were to announce a firm, long-term supply deal with a major customer like that, it would massively de-risk a huge chunk of their future revenue. That would be significant. Second, there are pretty strong hints about potential Department of Energy grants or other federal funding coming their way, specifically to support U.S.-based rare earth projects. Government backing would obviously ease the financial pressure, meaning maybe less need for future share sales that dilute existing holders. And finally, there's just general speculation about maybe accelerating the timeline for Round Top, pushing production forward perhaps to late 2026 or early 2027 instead of the previously expected 2028. That faster timeline might be what the market's already pricing in.
Okay, so if we pull this all together then, the bullish case, rated pretty highly in our sources, like 8.5 out of 10, seems built on this strategic importance and potential future wins. But that optimism has to be balanced against some pretty serious risks inherent in this sector, right? What should investors really be cautious about?
Well, number one, as we talked about with financials, is that pre-revenue status. That TTM loss of over $100 million means they are completely reliant on outside capital right now. If project costs blow out or if there are unexpected delays, they will need to raise more money. And any new capital raise often means issuing more shares, which can dilute existing shareholders and potentially push the price down. That's a major risk.
And what about actually getting Round Top built and running? I mean, a mining project this ambitious must have huge execution hurdles.
Exactly. The execution risk is probably paramount. We're not just talking about digging minerals out of the ground. It involves navigating complex permitting for the site, adopting and scaling up specialized extraction technologies, and achieving what they call vertical integration.
Can you explain that term, vertical integration plan, in this context? What does that really mean for them?
Sure. It means they don't just want to mine the raw materials. They aim to control the whole process from digging it up at Round Top all the way through processing and separating it into the specific rare earth oxides that magnet manufacturers actually need. Now, doing that minimizes reliance on foreign processors, like in China, which is the strategic goal. But it also dramatically increases the operational complexity, the upfront cost, and frankly, the chances of running into delays or technical problems along the way.
Okay, and lastly, market sensitivity.
Yeah.
This is tied to commodities, and it's in a sector that's pretty sensitive to geopolitics.
Right. While the stock's beta is moderate, around 0.77, suggesting its day-to-day swings aren't wildly more volatile than the overall market. It's definitely sensitive to rare earth commodity prices. Those can be volatile. And maybe more importantly, it's sensitive to global politics, especially anything involving China's role. I mean, even if USA Rare Earth gets its mine running, China still controls something like 80% of the world's rare earth processing. If China decides to manipulate the market, flood it with supply, or restrict exports, that could definitely impact global prices and USA Rare Earth's competitiveness, even with domestic production.
So, wrapping up the risk profile. Aggressive valuation, big current losses, significant execution risks. Given all that, who is this stock really suitable for right now?
Well, the sources seem to point to two main types of investors. First, you've got the risk-tolerant, shorter-term trader, someone looking specifically to play these upcoming catalysts over the next 3 months or so. The earnings, the potential ETF inclusion, the 13F filings, they're betting on the news flow. Second, there's the long-term, maybe more patient investor, someone who really wants structural exposure to the whole critical minerals theme, the push for U.S. supply chain independence. They're betting that the multi-year trend, the macro story, is just too strong to ignore, even with the near-term risks.
Okay, so quite a journey. We've covered the strategic importance, that national security angle, the sort of jarring $107.51 million loss versus the $2.6 billion market cap, the gap between analyst targets and the current price, and that really critical catalyst timeline running through maybe January 2026.
Yeah, and the long-term drivers, the demand from EVs, semiconductors, defense, those seem structurally very strong. That's the foundation for the whole bullish argument. But I think it leaves you, the listener, with a really crucial question to consider. Can USA Rare Earth actually navigate all those inherent risks, the technical hurdles, the permitting challenges of being pre-revenue, and successfully deliver on that complex vertical integration plan before they run out of cash and need to raise more money, potentially diluting shareholders again? Answering that question is really the ultimate test of whether you believe that high valuation is truly justified right now.
A very important question indeed. Thank you for joining us for this analysis of USA Rare Earth. We'll see you next time on Investing Talk Podcast.